All right, if you guys are just coming in, this will be our final part of our TrendSpider walkthrough. In this walkthrough, I'm going to go over the raindrop candles, the anchored VWAP, and the strategy tester. I'm also going to talk about a little strategy that I created that's very simple with Bitcoin that I've been testing for the past few weeks on TrendSpider, and it's had very good results. But first things first, let's start off with the raindrop candles. So to turn on the raindrop candles, all you got to do is go over to the top left. You have your candlestick selection system here, and you want to pull up raindrop beta. So once you have these raindrops pulled up, you can select your time frame. So what the raindrop does is it has two different sides of the candle, obviously the first half and the second half. The first half is going to be half of whatever the time frame you have selected, and the second half is going to be the second half. So if you have, let's say, an hour, each candle is going to be 1 hour, but the first half of the candle is going to be 30 minutes, and the second half of the candle is going to be another 30 minutes. So what the raindrop does is it shows you how much volume was traded at each part of that candle. And then it gives you the VWAP of that side of the candle. The VWAP is the volume weighted average price. So it takes all the volume, all the prices that volume was traded at, and it gives you an average price for that data. So if it's a green raindrop, that means that the second half of the candle has a higher VWAP than the first half of the candle. If it's a red raindrop, that tells you that the second half of the candle has a lower VWAP than the first half. It also gives you the open of the candle. So the three lines are going to be your VWAP, and it's going to be your open. The blue raindrop is also called a raindrop doji. It's when the VWAPs are pretty much the same, or very close to being the same. So as you can see here, this one has a little difference on the left and the right, but it's close enough to be considered a doji. So those are going to be your blue raindrops, basically telling you that the market doesn't really have a bias towards the first half or the second half of that candle. So if you guys are familiar with volume profile, basically what the raindrop is it's a volume profile of each individual candle. So if you put this on, for example, a daily, you're going to have a decent amount of data to show you where that volume was traded during the day. So you have your first 12 hours and then your second 12 hours. And it shows you where the majority of that volume was traded during that daily candle. So if we look at today's candle, we can see that the majority of the volume for that first 12 hours was traded around 10,350. The second half of the candle, the majority of the volume is currently being traded around 10,275. So this gives you the red raindrop because the second half of the volume, the second half of the candle, has a lower VWAP. Now, some techniques that you can use with these raindrops are the anchored VWAP, and you can also use them to see where breakouts and breakdowns are most likely to occur. So for example, if we take a look at this raindrop here, what do we see? We see that it's a red raindrop, meaning that the majority of the volume is being traded towards the downside on the second half of the candle. It's lower than the first half. That gives you the red raindrop. And what we also see is the second half has a massive cluster of volume towards the low of that candle. So that tells you that when price was pushing lower, you saw a lot more volume, a lot more sellers come in towards that lower price range. That is very indicative of a breakdown to the downside, a break of support. So your next candle, you have a little bit of a bounce, not a whole lot of buying volume towards the upper side. The majority of the volume is still on the bottom side. And then you have a little bit of a push up towards the second half of the candle. But then once again on these next two raindrops, you see the majority of the volume towards that lower section. You don't see any volume coming towards that upper price range. So it shows you that the majority of sellers and buyers were transacting around that 11,350 range. And then you finally see your breakdown on the next raindrop, and once again, you have the majority of your volume being traded towards that lower raindrop. So it shows you that as price is moving downward, sellers are still liking that sell price. They are still thinking that that is a good sell price. So then you see that failure even lower, all the way down to 9.5. And then you finally see that reversal when you see that massive change in your VWAP from your first half of the day to your second half of the day. So you see that on the first half of the raindrop, your VWAP is around 98.90 or 98.80. And then the second half of the candle, you saw a strong recovery, and you see a lot of that volume towards that upper side of that candle, and it pushed your VWAP to around 10.2. So you saw a very strong bounce on that second half of the day, which led to an even stronger bounce on the next the days that came after that. So these candles are very strong to see where most of the buyers and sellers are transacting, and it's very good to see where breakdowns and breakouts are very likely to occur. It's also very easy to see where reversals are starting to occur, because you can start to see candles like these, or even candles like these, where you see that strong failure downward, but then you see that strong reversal with a lot of buyers towards that upper section. That's going to be very indicative of a reversal. Now, another technique that the TrendSpider team recommends is you can use anchored VWAPs on your blue dojis, your blue raindrops. So for example, if we see a blue raindrop here, we can right click this candle and we can create an Alpha Trends anchored VWAP on that doji. So now what do we see? We see a bounce up. Your VWAP is below price, acting as support. And then we see a failure downward, and it gives you that strong recovery. But then look where we fail. We fail right on that anchored VWAP. Then we come back down, we pop again, but then yet again, look where we fail. We fail right on that anchored VWAP. We fail again, pop up. This one pushes through the anchored VWAP a little bit. You have about $100 breakthrough, and then you're not able to maintain that price action. And then once again, like we said earlier, you can see that strong reversal using the raindrop candles. You see, you have a lot of buyers come in towards the second half of this candle, but then that next raindrop opens, and you see a heavy amount of sellers come in towards that second half. So you see you see the red raindrop, which gives you that lower VWAP, and you see a ton of sell volume towards the lower side of that red raindrop. So another technique that I like to use that is not tying the anchored VWAP to the dojis, if you guys are familiar with my stream or familiar with my trading strategy, I talk a lot about point of origin moves. So where did breakouts or failures occur, and where is the point of origin of that breakdown or that breakout? So for example, if we go to a daily here, if I pull up this anchored VWAP from this point of origin, it is a point of origin because you have a small support, an accumulation, and then you see a breakout to the upside. That massive impulse has a point of origin at the bottom. Where did that impulse originate? It originated from this 7,700 price range. So what I like to do is I like to grab a anchored VWAP from that point of origin. And look what we have here. We have a massive impulse up. We have a pullback to that anchored VWAP, almost perfect price action. Another bounce. You have a swing failure pattern here. So you break through it for one candle, and then you retrace on the next candle. This gives you a good buying opportunity. Then you see another bounce. You find support on that anchored VWAP, your last bounce before failure, and then look where you recover. You recover, resistance, resistance, fail, and then here is where you start to not respect it anymore. It becomes more of a middle of your range. So then you bounce, it acts as resistance again, almost a resistance there, and then another resistance here. So nearly every single major move that happened after this impulse could have been traded using this one anchored VWAP. So another anchored VWAP that you can take is the high candle. So I have that one right here. And you can see that the people who started trading from this high, your average price is going to be around 11,000. What that tells you is all of the traders that started to trade from that high candle, the average price that they are trading at is 11,000, and we are currently far below that. So the average trader, if they started to trade from that high, they are losing money. They are price is pretty heavily below their average price, so they are underwater. So if you see a support come in, they are going to try to protect their positions, and where they are most likely to drive the price is back towards that VWAP, which also almost lines up with the VWAP from the point of origin. So it gives you that 10.7 to 11,000 range as a major resistance, and that's where you can see where this candle found resistance and then failed downward. So that might be a little confusing. You guys might have to watch this video a few times to really understand what I'm talking about. But it's pretty simple once you get the hang of it. So you find point of origins that created impulses, and you can just take your point of support or point of resistance, and you can grab that anchored VWAP, and you can see where your trend starts to shift. So if you take the anchored VWAP from this low, you can see that you found support, and then you finally broke downward, and then it turned into a resistance. So until the price gets back above this 10.6 anchored VWAP, your average trader is going to be underwater if they started trading from this low. Now you can create alerts on these lines just as you would with anything else on TrendSpider. So if you want to go ahead and right-click on your anchored VWAP, you can create all the same alerts that you create with their other indicators. That's going to be it for the raindrops for now. I'm also going to talk about the strategy tester. Let's get started on that. So the strategy tester is very advanced. It took me a little while to get used to it. But go to the top, turn on your strategy tester here, and you have your entry conditions on your left, your exit conditions on your right. Right here it has what time frame you want this strategy to be run on. How long do you want this to be back tested? Do you want it to just do your current chart? Do you want to do a shallow test of 2,000 candles, a medium test of around 3,000, or a deep test of 7,000? So I typically do deep because the more data, the better. And then you can do, what do you want it to trade by? You have a lot of different choices here, but the standard is close. Now, the strategy part, I could talk about this for hours, obviously, because there's many different strategies, but it's really going to be what indicators you like to trade with, and what time frames you like to trade with. So it's all going to be based on kind of what kind of strategy do you want to build for your trading. And I can go over kind of a strategy that I created for Bitcoin that is very simple. If you guys watched my last video, I told you guys that TrendSpider does not have Ichimoku currently. So if you're an Ichimoku trader, TrendSpider does not offer Ichimoku at the current time. But you can kind of build your own makeshift Ichimoku by using their midpoint indicator. So what I went ahead and did is I built a strategy using the 15-minute chart. It looks for a bullish TK cross. So it's going to look for, let me pull up the 15-minute here. It's going to look for when this blue line crosses the teal line to the upside when it's above the 100 EMA. So very simple. You look for a cross above the 100 EMA, and that is your entry condition. And then you just take profit when you see the blue line cross downward from the teal line. So this is your TK. This is your conversion line and your baseline. So if you're familiar with the Ichimoku, this strategy is nothing but a TK cross above the 100 EMA. So I'm going to go over how to build this. So let me go ahead and delete these, and we'll build this from scratch. So go ahead and click Add Parameter, and then you're going to do Condition. You're going to look for Indicator, and then you're going to pull up whichever indicator it is that you want to start the strategy with. My indicator is midpoint over period 9. And then we do cross up, indicator 26. Okay. And then we also want to go ahead and add condition, indicator, and then we have my EMA here. Exponential moving average 100. And then we do less than price, close. Because that's going to tell us when the EMA is below price. So as long as the EMA is below price and we see a bullish TK cross, that is going to be our entry. So what you can do with the strategy tester is you can create a few different parameters, and then you can select any of the following, and that will mean you're going to enter whenever one of those conditions is met. So for example, if I wanted to do, let's say, condition, indicator, 9, crossing up, indicator, and then the EMA 100, what I could do is, let's get rid of this one for now, and I could do any of the following. So it's going to enter, these are my entry conditions, it's going to enter when either this happens or this happens. And then we can go over to my exit, and let's say I want to exit when condition, indicator, 9, crossing down, indicator, 26. That's going to be my exit. So we can go ahead and test this. I have actually not tested this before, so this is going to be a surprise to me. Let's take a look at it. So basically, anytime the 9 crosses above the 26, or the 9 crosses above the 100 EMA, it's going to enter. So this is actually not a bad strategy. So it's actually up 32%. So this, oh actually, let me go over this real fast. So this performance chart The blue section is going to be how your strategy is performing. So this is your percentage return on investment or return on equity. This line here is going to be how the overall asset that you're looking at performed. So basically like a buy and hold strategy. So if you bought and hold, you'd be down 4% on the past 6,000 candles. But if you did the strategy, you'd be up 32%. So a really cool feature of this performance chart, you can click on all these things down here at the bottom. So let's turn off the strategy. This is going to give you your buy and hold strategy. So what you can do is you can click on positions, and it's going to highlight when your strategy was in a trade. So where did you enter, and then where did you exit? So if we turn this off, we can see kind of this is where it was in a trade. The entire time it's highlighted, that is when our system is in a trade. So if we bring this back up, this is the overall buy and hold. This is when it's in a trade, and the non-shaded is when you're not in a trade. So this is actually a good strategy because this is only a long strategy. There is no short. So we don't want to see a lot of highlight when we're on a downtrend. And we currently don't see that. We only see a lot of highlight when it's on an uptrend. You see a little bit on the downtrend here and there, but not the entire way down. So I'm going to go back to our previous strategy here. Make sure you click this back to all of the following, not any of the following. And then we are using a 15-minute price close greater than the 100 EMA with the 15-minute midpoint 9 crossing over the midpoint 26. And as we can see here, the strategy is performing very well compared towards the buy and hold. Buy and hold's down 4%. The overall strategy is up 30%. Very simple. We had little to no drawdown. We only had one drawdown period. Besides that, we were positive the entire way. Now, another thing you can use here on the price behavior, this is a little confusing at first glance. But if you go down here, you can look at how many positions are taken and what is the average number of candles that position holds on to before it closes. So let me close everything else. So as we can see here, we took 72 positions. The majority of the positions did not run for more than, let's say, 35 candles. You can see how it took a pretty strong drop here after 35 candles. The majority of these positions were in less than 35. And you can see most of them were closed within probably about 15. You can see a drastic drop from that first candle all the way towards that 35th candle. That just means that this strategy does not hold on to the trade for more than 35 candles on average. Now what we can do besides that, we can look at the mean change percentage. How much did the asset, for right now we're looking at Bitcoin, how much did that asset change when you're looking at holding on for longer periods of time? So as you can see, the more candles you hold, the higher the mean change percentage gets. Until you get to about 117 candles, then it gets a little volatile here. So this is probably just a little an outlier where we wouldn't use this in our actual data set. The overall data is showing that on average the mean change percentage is about 1%. You have little dips to about 0.6, you got little rises to about 1.3, 1.4, but on average you're probably about 1%. So that means that the majority of the moves while you're in a trade are about 1%. You can look at the median change, which is going to be about the same. This is a random control, so just a random strategy. number of positions we already went over. This gives you a percentile of your strategy. So as you can see, the upper range is going to be a bigger percentage move. The lower range is going to be a negative percentage move. But overall, you don't need this very much in your strategy testing. For the most part, what you really want to be paying attention to is the number of positions, how long on average you're in a trade, and then you really want to be paying attention to your percentage return on investment, and is it doing what you want it to do? So for example, this strategy is a trending bullish strategy. So I want this to be highlighted when it's trending upward. I do not want this to be highlighted when it's trending downward. So this is doing what I want it to do. So when you're building strategies, you really want to pay attention to how much you're receiving on your return, and is it trading where it should be trading? And then you want to see, on average, how long should I hold on to this trade in this strategy before it really starts to not be worth holding on to anymore. Now, another few things you can do with the strategy tester. You can show these trades on your chart. So if you hit see on chart, you can see your trades on your chart as long as you're on a chart that is the same time frame as your strategy would be traded on. And as we can see here, it entered here and it exited here for 2.5 or 2.15% gain. And then we had a false entry here, which ended up closing for a small loss of 0.3%. So as you can see, the wins are much bigger than the losses. That's why the strategy does so well. Now, another thing you want to look at here for the strategy tester is how many positions did you trade? And what is your average gain or loss for each individual trade? So we traded 72 times over the span of 2 months. And for each individual trade, we average about a 0.4% gain per trade. That's actually not that bad. For 72 trades over the past 2 months, that's almost a trade a day. And when you're averaging about 0.4% a day, that's actually very good. Now, keep in mind that this strategy is a buy-only strategy. You are not shorting on this strategy. You could flip this strategy to do a short. So you could put entry and then do the midpoint crossing down. And you want to see price less than the 100 EMA. And then you would just flip this so the midpoint would be crossing up to close your trade. And that would give you the short strategy. Now, finally, the last thing that you can do with the strategy tester is you can have it alert you whenever this strategy would enter or exit. So if I wanted to be alerted, you would do the alert on the entry side. So I'd go ahead and create the alert. Now it's going to alert me when it's entering, and I'm going to go ahead and create the alert for when it's exiting. So these are going to go to your alert list. You have the entry and you have the exit. So now the next time this takes a trade, I will be alerted, and when it closes a trade, I will be alerted. So that's going to be it for the strategy tester and Raindrop walkthrough. Now, obviously, the strategy tester is a lot more advanced. So if you guys want to learn more about the strategy tester, be sure to sign up to our webinar that I will be doing with the TrendSpider team on September 16th, which is this Monday. We will be going over basically what I went over in this video in a little bit more depth, and we'll also be able to hear from the TrendSpider team about their plans for the Raindrop Candles and the strategy tester moving forward. So if you guys would like to sign up, go to the description down below and sign up to that. If you guys would like to sign up to TrendSpider, feel free to use my discount code in the top left, DJBT15, for 15% off your subscription. If you guys enjoyed this video, don't forget to hit that subscribe button, and I will be releasing more videos in the future with TrendSpider and other teaching videos. So I will see you guys later. Thank you for watching.